Good morning, subscribers. Welcome to the daily pre-market analysis. Myself, Rejection. The Nifty has been indicating a negative opening of around 50 points. So we ended somewhere around 17,562, and it's SGX indicating an opening of 17,505. So nearly we are opening 50 points down. Looking at the yesterday, the last week, especially if you look at the last three trading sessions, after a rally, we have seen a 2 week of consolidation. So we are into a triple, I would say, inside bar pattern, which means that after a bigger bar, the couple of bars have been into a range bound. So either side breakout, probably 17,476 or 17,650. So 450 to 650 will be a key important levels to watch out in this week. If I just look at the slightly shorter term charts, index is trending between 50 hourly moving average and 200 hourly moving average. So 200 hourly is placed at around 17,315, which will act as a major support this week. And if I just look at this gap, which I have been discussing for quite long, that 17,485, 17,385 will be a trend decider for the further course of momentum into the Nifty. So keep a watch on this week. 17,650 on the upside and 17,300 on the downside. Either side range is broken. I believe the momentum could be a fast and furious on the either side breakout. So probably we may see a range for a couple of days. 17,300, 17,700 you can keep a watch on. Either side break could be. One index where I expecting that the pressure would be there, may take Nifty slightly lower, is the IT Index. So if I just look at the IT Index, we have been discussing double breakout. The rally was there, but again it failed to move above the 200 days average. It's now back below 50 days average, which is again a slight sign of cautious if I just look at the momentum. So the last week when it tried to break the higher levels, the momentum was there, it completed the gap and resuming the bearish journey. So this index, which generally holds 17.5% of weightage into the Nifty, may take Nifty onto the downside, is slight risk. And if I just look at the point and figure chart over here, we may see a double bottom breakdown. If I look at these levels around 27,600, 27,650. So keep a watch on this index below 27,650. If I just look at the recent low was 27,300. So we may see back towards the downside levels into the IT index. So 27,500 or keeping a cushion will be key important to watch this week. So in case that is breached, we may see a pressure onto the Nifty. Something positive onto the for the Indian markets or equity markets is that crude oil, after rally back from $85 to around $97 mark, it failed to cross the 50 and 200 days average sustainable move. So if I just look at, we are on the verge of giving the death cross. So basically death cross is when a short term average slips below the long term average. The 50, the blue line, if it goes below the orange line, which is 200 days average, we may see a death cross. And if you remember, I have done a video also on crude oil that goodbye $100, and I mean that the $83 mark, which is this level, if it's breached, we may not see $100 mark in the short term. So keep a watch on this. Below $83, it may boost equities as well onto the positive side. And I'm expecting below $83 crude may see a likely of around $75 to $68 mark into the short term momentum. So keep a watch on this crude oil. It may again see a positive bias for Nifty. So for this week, keep a watch 17,350, 17,300 onto the downside to 17,700. I'm expecting a range mount for a couple of days. Either side break will resume the journey. So you can, as a derivatives trader, if you're looking for a short strangle, you can look at short strangle of this week expiry. Signing off and have a profitable week.